I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. Ryan, it's great to see you as always. Welcome back to Trade Talks. And while we're just about flat now on the index, Nasdaq-100 has had quite the week.
Yeah, it was a marked change from last week, but a good week for stocks broadly. You see QQQM and QQQ each up 5.1% for the week, better than the S&P 500, which advanced by 3.9%, better than S&P 500 Value Index, which was up around 2.7%. But the gains were pretty widespread. We only saw 9 names in QQQ and QQQM with negative performance for the week. And all sectors in QQQ, as well as the S&P 500 index, were in positive territory. We saw some pretty decent economic data towards the back half of the week. We saw, largely, very good employment data. Thursday, we saw initial jobless claims come in under 300,000 and continuing claims come in under 2.6 million. This is the first time this has happened since the pandemic began. For both of those readings, it was for the week ended March 13th, 2020. So quite a long stretch. And I know that you and I have talked on the show about waiting for this employment to start ramping up. And the Fed has talked about, as childcare and people go back to school, some of those concerns start to get ironed out. We should see people go back to work. It was a little bit lagged. We hadn't really seen the numbers advance by that much, but this week certainly was in the right direction. Speaking of the Fed and employment, on the inflation front, producer prices came in a little softer than expected. A 0.5% advance in the headline and 0.2% increase for the core, which is ex food and energy. It happens to be the smallest figure thus far for 2020. So we largely saw prices for services take a pause. You saw airline fees come down over 15%. You saw rental car prices come down a little bit. I think a lot of that is around growing concerns about the Delta variant. So, on the other front, you look at the costs of goods, they continued to increase. So you saw services very soft, goods continued to increase. We saw energy prices continue their climb higher, as well as some of the bottlenecks in the supply chain that have persisted. But then lastly, Friday brought a pretty strong retail sales report. That may have also been kind of an indication from what we're seeing with the Delta variant. People aren't spending as much on services. So from there, they're actually spending on goods. Just an important thing to keep an eye on as we head up to the upcoming holiday season. Obviously very important for a number of securities that are out there. Keep an eye on that, along with some of the supply chain disruptions that we've seen. And then for the week, also some earnings releases, right? We have earnings season kind of ramping up, largely big banks over the past week, and pretty much across the board, pretty solid results. I think investors were pretty happy. From a more QQQ-centric perspective, overweight Netflix reported last night. Pretty solid quarter, beating EPS and revenue estimates. Subscriber growth remains kind of front of mind for analysts. So subscribers for the quarter handily beat, but I think when you look at guidance for this upcoming quarter, it was roughly in line with the street. I think analysts wanted to see a little bit of a more blowout number on the guidance, particularly from the success of Squid Game. So the stock is trading lower today by 2%. Right. But as we advance next week, looks like a lot of the QQQ heavyweights will be reporting earnings. And for you and I, that's always an exciting time of the quarter.
Right, it definitely is, Ryan. And it's interesting that you brought up that financials have done well. We've seen some healthcare this week that has also done well, but they don't necessarily have the issues that they're facing with supply chains, let's say, as much as retail or the tech companies. So it almost feels as if the market is on pause and digesting everything that's happening with inflation and the bottleneck with the supply chain until we start to see tech and retail companies come out, because how they perform in their guidance really is going to be the tail of the tape, in my opinion, anyway. But let's go back to jobless claims for a moment. I can tell you anecdotally, New York City, where you and I work, I feel like ever since that October 1st timeframe, it feels busy again. I would say certainly more tourists. I'm looking outside the window here at Times Square. Certainly more tourists, still a little bit light on the commuter rails and the subways, but I feel like October 1st, November 1st are key dates for people to come back. And I wonder if part of that is what's being reflected in the numbers as well.
Yeah, I mean, I think for sure, right? For your first point, you look at sort of these tech bellwethers or technologically oriented bellwethers. I mean, they've really kind of, as your point, they've driven the market one way or the other, right? That really is the tail of the tape, and I think everybody kind of awaits, and you and I included, for their earnings reports and certainly their guidance, particularly in this quarter as we head into the holiday season for a company like Apple. And yeah, I mean, it does seem like there are more people outside in New York City. Ridership continues to kind of inch higher. And I think it's important to note that, from a tourism perspective, in early November, it does seem that internationals that have been vaccinated are going to be able to come back into the U.S. Into U.S. borders. So, from that perspective, there's just a lot of push and pull dynamics that are going on in the market. And as you had said, a lot for investors to digest.
Yeah, there certainly is. And let's take a look at your last chart here because, Ryan, you were mentioning that all the sectors were up for the week. What was leading the way at the end of the day?
Yeah, generally when you see widespread gains and outperformance from QQQ, it's going to be driven by tech, consumer discretionary, and communication services. This week was no different. I think just one thing that's important to note is all sectors that QQQ has exposure to outperform their counterparts in SPY, with the exception of healthcare. So all in all, widespread gains for the week, a good week for stocks.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.